Have you ever wondered what is the meaning of accumulated depreciation? What is the difference between accumulated depreciation and the depreciation? How it is relevant to find out the net book value? Here everything we will cover in this video. Hi, this is Milad Akbari from Akbari Education. Welcome to your own channel. As I told you, today we are going to talk about the accumulated depreciation. But what is in this video? Here we have overall the definition and explanation of accumulated depreciation. What is the difference between days and the depreciation? How it is related to the book value and net book value, or whether it is days accumulated depreciation is an asset or liability. And there will be two examples as well. Directly go to the work. The accumulated depreciation account is a contra asset account on a company's balance sheet. Remember, it is exactly a contra account. It is opposite to an asset. So considering this in point, this is not an asset. This is a contra account of an asset. I will come to that in deep. It represents a credit balance. Good point. It is a credit balance. It means when it's opposite, the asset is the debit balance, but now it's opposite side of that. It means it have a credit balance, and when there is an increase in that, there will be a credit entry to that. It appears as a reduction from the gross amount of fixed asset reported. This is the fixed asset. You have purchased something for some amount, like suppose you have purchased a computer for $5,000, and this accumulated depreciation will be considered as a deduction from the gross amount you have paid for the fixed asset. Accumulated depreciation specifies the total amount of an asset used to date in the asset's useful life. Very much helpful. You know, when you say this total amount, like suppose $3,000 is the accumulated depreciation, it exactly means that you have used $3,000 of this asset since inception, since the day you have started the work or you have purchased. Mainly when you purchase, you are directly after installation, you will directly start the work. But since starting the work, or since the day that the depreciation has been charged. Remember, there is another video, I will put the link just one side. Go ahead, that's related to depreciation. It will give you a clear idea about the depreciation. Go review that. That will work a lot for you. Okay, going ahead, at the amount of accumulated depreciation for an asset or a group of assets, it means it can be for an asset or a group of assets, will increase over time as depreciation expense continue to be recorded. What does it mean? In simple word, when we have an individual periods, it can be 1 year. When we have the depreciation, it will be added up to what? To accumulated depreciation. It is addition, collection of all the depreciations. So when you have a new depreciation expense charge, it will be added up to the accumulated depreciation. It means by passage of the time, this value will increase. When an asset is eventually sold or put out of use, the accumulated depreciation associated with that asset will be reversed, eliminating all records of the assets from the company's balance sheet. Okay, I purchased a computer for $5,000. Now, after 3 years, suppose the useful life is 5 years. After 3 years, my accumulated depreciation is now at $3,000. When I'm going to sell this product, this computer, it exactly means that the accumulated depreciation will also be removed from the balance sheet. Okay, this is the gross. This is the accumulated depreciation will be deducted, and you will reach to net book value. I will come back to that. Let's go ahead. There is a let's test your understanding for your own self. Go ahead, review this one, pause the video, and just select the best option that you think will be the correct one. We will review the comments. Going ahead, accumulated depreciation is the total amount of depreciation. The total amount of depreciation. Okay, we are now discussing the difference between accumulated depreciation and the depreciation. I already told you, but let's deeply check that. Accumulated depreciation is the total amount of these individual depreciations up to date. It means if you used 1 year there will be accumulated depreciation of 1 year. If you use this for 2 years, in second year, the second year depreciation will also be added to this one. The third year will be added, the fourth year will be added, up to the time you're selling the computer or the equipment, whatever you use, or you're just throwing out. While depreciation expense is the amount that has been depreciated for a single period, depreciation expenses individual amounts, individual periods, and the addition of all since the inception is called the accumulated depreciation. What's the relationship between this accumulated depreciation and the book value? Accumulated depreciation is used to calculate an asset's net book value. The other name is carrying value, which is the value of an asset carried on the balance sheet. What does it mean? It means, as I told you, the gross value of $5,000 for the computer has been recorded. I have used this for 3 years of 1,000. Suppose it is accumulated depreciation of 3,000. So the remaining balance is called the net book value or the carrying value. And that carrying value is exactly $2,000, which will be recorded as a net book value inside the balance sheet. If you don't know the financial statements, there is a great video. I will link it somewhere, this side or this side. Go ahead, review it. That will be very much helpful to you. It's a great one. Look to that. The formula for net book value is cost of an asset minus accumulated depreciation. Exactly, I told you, the gross cost or price minus the accumulated depreciation will end up to the net book value or carrying amount. Accumulated depreciation cannot exceed an asset's cost. If an asset is sold or disposed of, the asset's accumulated depreciation is removed from the balance sheet. Remember, if you purchase a computer for $5,000, the overall depreciation during the whole useful life should reach to 5,000, and it cannot cross this amount. It's important that you remember, you cannot cross the cost, the initial cost or the overall cost of this fixed asset. And whenever you are going to dispose these assets, you need to remove the accumulated depreciation from the balance sheet. Net book value isn't necessarily reflective of the market value of an asset. That's a great question in most of the exams and interviews. You have depreciated by $1,000, but it is not equivalent to market value. The market value of the asset, that computer may fluctuate a lot, may decrease or gone higher. Even if, suppose you have a building, you have depreciated that for 50 years, after 30 years, the value has decreased, but actually the value of property has gone up. And there is another thing for that, revaluation under IAS 16, which we will discuss in the future videos. Let's go ahead. Oh, come on. Is it an asset or a liability when that's a contra of the asset? Accumulated depreciation is recorded in a contra asset account. It means the opposite account, meaning it has a credit balance. It means the increase will be a credit entry and a decrease will be debit entry, which reduces the gross amount of fixed asset. It means it works opposite. When this balance increase, the accumulated depreciation increase, means it will decrease the overall value of the carrying amount. It will be deducted from the fixed cost, the total amount paid for that fixed asset or the asset. As a result, it is not recorded as an asset or a liability. Remember, it is not liability. It is not an asset. It is actually contra to asset account, but it is not a liability. It's not payable to someone else. So it's only a contra account. To find out the carrying value, there is the second. Let's test your understanding. Just pause the video, focus on this question. That's exactly taken from what we have studied in these 2-3 slides. It will concrete your knowledge. Just focus, reply with the answer it seems correct for you. Let's go ahead. There is an example 1. Say a company spent $50,000 for equipment for long-term use in its operations. It's estimated that the salvage value will be $2,000 and the useful life will be $15,000. Just watch this depreciation video. You will realize what is salvage value, residual value, and these things. Okay, considering you have watched already, for calculation of depreciation expense, you will deduct the salvage value from the amount you have paid and divide it by the useful life, and you are reaching to $3,200 per year depreciation expense. So what's the accumulated depreciation of this asset after 5 years? If you multiply 5 by $3,200 per year of depreciation, the accumulation of that will be exactly $16,000. That's a question you may receive in your written test, or written test of a job, or written test you have in your exam. Go ahead. Example 2. If a company purchases a piece of printing equipment for $100,000 and the accumulated depreciation is $35,000, what will be the net book value? It's very easy. I told you, the total amount minus the accumulated depreciation, you will reach to the net book value or the carrying book value. So 100,000 minus 35,000, you will reach to 65,000, which is the net book value, or call it carrying value. Thank you so much for being with us till end of this video. Appreciate your time, and appreciate if you can press that beautiful like button. It will help the algorithm of YouTube, and subscribe to the channel if you would like to see such training tuition videos in the future. Thank you so much. Have a nice time. Bye bye.